Black and white. Okay. So check it out again. The next class, next week I'll come because 4 classes will happen. 20 but 8 class. So I want to go to the extra classes. Next week 1 class, following week 1 class. For next week 2 classes and Saturday we have 1 class. We'll see what we have. This Sunday 3 to 6 9. So most probably Sunday 3 to 6 the class. or 20 minutes from management to cover in that very ministry. Srilanka. So next class, next week I want to take one. I wish I got all the subjects in two classes. So I'm thinking, okay, I have a one paper. Fine. So we have stopped the session 2 weeks before at audit risk. So there is we have discussed. Fine, not wrong. Stopping the system. All is still complete. Which one? Will we discuss about inner index? Inner index discuss the also inner index no. After discussion, identification of the will be discussed. Okay. Fine. So discussion. So in the discussion, first of all, what is operator's objective? Number one, provide opinion on financial assessment to the financial of material state. That's the only opinion. Primary opinion. Okay. So I know that you must feed it into your mind, what you can segregate into each opinion, different opinion. Okay. On what? On financial statements. In that financial statement also, be from material statement. These are the three main points we must keep in your mind when it comes to workers operation. Okay. What is our scope of providing an opinion on finance statements? So the from agreements. No. So what is our scope? Only finance statement. Beyond that, we don't need to keep about only financial statements. That financial statements with the material statements are there. 3.3 material. Okay. So for that only, I told you that risk assessment is important. Okay. Risk assessment is important. Risk assessment is important. Why risk assessment is important? Also, is only financial statements. In that financial statement also material transcripts. So let's say you are an auditor, so you are going to do the audit for ABC years. In that ABC, you have the financial statements, you have 100 records. I will break up the things. 100 records you have. If you pay your financial statements, and financial statements you can see 100 records are there. Only can you verify investment records. So here, you are going to verify only material records. Only material records. So based on which material? OM or PM? Already I have explained this one before. After that, now we are going to discuss here. Doesn't matter, again, we have to link in the logical point. So, material accounts, based on what way it's not clear. So, just you must keep in your mind material accounts, material, value of quantity or you should see material performance material. Okay, based on performance material. Now we are going to filter what are the materials. Now, example, let's say 7 accounts. Okay, that's the example of 7 accounts. Okay. So now we are going to focus about only. Now we are going to verify only these 70 accounts. We are not going to bother about entire accounts. Okay. What we are undertaking the 70 become. Okay. Now, next question. Same audit procedures. Are you going to perform same audit procedure? Entire 70 accounts. Same audit procedures are you going to perform or different audit procedures? It means different weightage you are going to give or same level of weightage you are going to give entire 70 accounts. Same level or different, not same. Level of audit procedures. Okay, that considering the one. So this audit procedures will be made. I told simple example. You have 6 subjects, so 5 subjects. All 5 subjects are very important for you. But you are not giving same level of weightage for all 5 subjects based on the difficulties. So how your weightage will be made for this subject? I cannot spend more time. Okay, this subject I can reduce the time. So this weightage, how it will be made based on the risk. If you think okay, this subject is difficult, the chances of failure is high, then you will spend more time. But you want to pass the exam, then you have to spend more time to study. So, if risk is high, you will spend more. If risk is less, still you will spend time to study. You can ignore the studying. So, but compared because of this subject, you will spend less time. Okay, the same concept you can apply here. 70 accounts are material, important accounts. But so all these 70 accounts, we have to do the audit procedures. We can ignore the audit procedures. But what type of audit procedures? How, what extent we are going to do the audit procedures? How much weightage we are going to give these accounts? It will be varied based on the risk. What's the risk? Material misstatement risk. Okay, material misstatement risk. Out of these 70 accounts, what are the accounts will have high chances to generate material mistake? So, certain accounts, let's say in my example, we will segregate into 35 accounts, high chances to generate material mistake. Okay, let's say 25 accounts. Moderate, medium. I think this is it. 10 accounts. Low. Okay, so based on this, high chances of high, low chances, medium, okay, low, medium, secondary. So now, when you are doing audit procedures, more audit procedures will be performed for these 35 accounts. Medium level of audit procedures, the time in just keep in your mind, moderate level of audit procedures will be performed for these 25 accounts. Still, You can't ignore audit process for this accounts. You must do, but compared to these two, less audit process clear. So here you have segregated. Okay, these are the high chances. These are the low. These are the medium. You have segregated. Example in just do now. Make a segregate risk assessment. Okay, how you have identified okay out of these 78 accounts, 25 accounts are high risk. 25 accounts are moderate. 20 accounts are low risk. How you have identified that analysis called risk. Okay. Make a thing. Now, this 35, 25, 10, okay, we have segregated. Now we are going to generate design audit procedures. Now, when you are designing audit procedures, then you go. When you are subject matter, you have to do the report. You have to spend the time to study. Those study will not exam, but repairs will be very okay. So then subject matter is something that amount of difficult kila make a difficult kila make I expect a piano. If difficult kila I expect you should have reasons. Okay, these are the voluntary difficult reasons. So that when you are studying, you want to mitigate that risk. That reason so taking some for example, let's say audit. I will take myself as audit you are saying difficult. Okay, fine. Why difficult? Customer cannot. Difficult, difficult in manage, hard subject in manage. It reason. So audit difficult means okay because of new terms, words, accommodation. Overlapping discuss because of that, that is difficult. Really, more things are there. Because of that, difficult. Questions are difficult. So, likewise, why difficult? So, that is called risk factor. Clear? So, it is difficult. Okay, why difficult? Reasons are there. So, now, against those risk factors, you have to create strategies. Let's take one risk factor. New terms. You are not familiar with those audit terms. Now, what you do, you have to spend more time and you have to get familiar with those terms. So, it's about learning. The same thing. What are the risk factors make difficult that something? Same thing. What are the risk factors? Okay, what are the risk factors we create material misstatement in the financial statements? Through which actions? Risk factor risk factor risk factor account or accounts. Impact on maybe factor account or accounts from impact on. These are material statement. Okay, what is our final objective? Material statement. Okay, may account impact risk factors okay, so that identification and analysis. Okay, analyzing that identification and analyzing called risk assessment. Okay, Join me run this discuss and this control this so these risk factors must be identified and these risk factors must be analyzed that are called risk assessment. Okay. Owner not Paragana, but I think already I have given this. Owner, sir. Okay. What is the stage of discuss now? Identification of risk. So, key point is, as an auditor, you are not going to identify, you are not going to bother about entire risk. So all the risk particularly are in. Okay? Here you must listen. Whatever risk you are identifying, you are going to bother. What are the risks we create material statement only you will consider. So always as an auditor, you must be material statement. Okay? So risk identification. So here we have two types of risk. Business risk, audit risk. As I told already, I have told you. Business risk we don't even bother. But if when I am given for the audit purpose, we don't need to buy those things. Other types of business risk. What do you mean by business risk? You don't need to memorize those things. Just on an audit purpose, we will understand. The most important thing, how those business risks will create audit. That's what we will discuss. And then just but we are not discussing that one. So this semester, this level coming discuss one by one. That's the important point. Okay. So here we are going to discuss about audit. Majority, main we are going to discuss about audit. What is meant by audit? What is meant by you are receiving exam? Failure. Likewise, audit risk also. Our objective, failure of objective audit risk. What's our objective? Providing opinion on financial statements or information statement. So, if you give inappropriate if you give inappropriate opinion, that is audit risk. Okay, what's meant by inappropriate? Material statements are there, but you have given opinion. Material statements are not there, but you have given modified opinion. Okay, but I want the theory I want to both things this one, but practically material statements are there, but you are paid to identify those material statements and you are given opinion. That is called inappropriate audit opinions. The opinion. Okay. This audit risk. We have inner risk. control limits. Reductions. Okay. Control this, reduction in this. These two, we say risk of material misstatement or risk of material misstatement. Why we are saying risk of material misstatement? These two risks are coming from management first. Already given here. Yeah, these two risks are coming from management side. This is from what does that explain? Now, where we are discussing this. Now we have to identify what are the risk factors we cause material mistakes. After that, we have to analyze. So, analyzing it significant risk. Significant risk. What are the risk factors we cause material mistakes? Then identifying stating of local identifier. Okay, what are the risk factors? So, understanding the taking of identifier. Discussion procedures we are discussing. That's one. Discuss with the employment management, discuss with the internal auditors, and other experts, observation inspection, and everything. So, through this audit procedure, we can do the risk assessment procedure. So, risk assessment, but how identification analyze. Okay, through that risk assessment procedure, we should identify what are the inherent risks, what are the controls. Okay, so number one. So now we are in risk identification stage. So now we have identified what are the risk factors before material mistake. So if you want to identify what are the risk factors before material mistake, filter and run the full filter and run. If you filter material mistake risk factors particular order. So first of all, we need to identify the risk factors. From there, second step, we have to analyze and assess what are the out of these risk factors, what are the risk factors we cause material mistake. So this identification stage, you will identify the entire risk factor. So one of the risk factors type is inherent. Clear? So now question is, what is meant by inherent risk? Inherent risks. Here also you can see this side, it's called material statement, management cycles. Management cycles. Okay, this is what the cycles. Okay. So in the short form, we say IR. Okay. IR. What is mean by ignorance? Is cause material misstatement. Okay, is cause material misstatement due to non-availability of related controls. Okay, in simple term, no controls. This will cause material statement due to material statements due to non-availability of related controls. A risk against controls man. Okay, because of that, certain risk will cause material misstatement. That's called inherent risk. Okay, clear? Simple two wordings you must keep in your mind. Risk are there, those risks will create material statement, but to mitigate those risks, company does not have internal controls. Does not have internal controls. Okay, keep this point clear in your mind. Okay, controls say controls land. Okay, controls are controls. And come back at that point. So here you should keep in your mind those risks related materials. Okay. But to mitigate those risks, company does not have internal control. Okay. Overall examination process okay, fine. Why because something is also certain reason I have for. Okay. So what are the things I have for? New terms, words, is the first time developing, volume, high volume, notes, volume is high. So these are the things. So inherently, those are the things. Okay, you don't have the controls. Now the controls are learned. Api term को एक factor का terms word is name. और again name component is name. एक ऐसा ये मेरे सवाल उसमें क्या एक हम जल्दी समझना. इधर इसके क्या दिया? एक आप नहीं कर सकते. एक अभी नहीं. और इतना और फर्स्ट टाइम लेवल पर ना फिर इसके क्या? Okay, if you make strategy, regular study करना एक बार फैमिली हो ना एक सेटअप करें एक स्ट्रैटेजी रखता एक इनर that is called your no related controls. इसके लिए मतलब मैं ये इसके लिए नहीं लेना है अरे ओके चेकिंग फर्स्ट टाइम और लर्न करना वाला न्यू टर्म्स है इसके आते हैं फिर इसके और फेल है और सही सवाल है इसके लिए ये इसके कारण मिटिगेट करना हुआ स्ट्रैटेजीज फिक्स करो. One of the risks I have taken new terms. So how you can mitigate that risk? If you spend more time, you study more, then you will be familiar with the terms. Then audit material level they make a new term now. तर सारा एक बार हमसे क्या बोला मैं बोल रही हूँ. Then इसके लिए ना the strategy they have put. How? Because of that you want fail. अगर इसके लिए मिटिगेट करना है आप कंट्रोल डिस्कस करें और कंट्रोल करें स्टडी करें more time to spend. Okay, same logic you can spend here. Risks are there, but the problem is those risks can be mitigated by introducing the controls. Okay, so if company introduces the controls, then those risks will be mitigated. reduce. If controls are not there, still those are high risk. Risk you know, risk exam risk new terms. New terms risk until examination okay, so risk is there. You have put some strategies, regular studies. Now you will pass the exam. That's the logic. Simple logic. Risk okay, then on the example, Lanka, example, first day, you put it or a block. Study or a section of $1. Other like at the end of and same thing I have explained first level was not making. They will also second day 5 after the link we part and 2 minutes aside. Fourth day, what they and one is reject from here. So that 8 o'clock strategy is control. Okay, first day you will take control. Then other main thing that's important. So, following day, you are able to okay. So that is all control. So before introducing the controls, risk are there, those risks are inherent risk. Okay. So when it comes to organization point of view, what are inherent risks? Complex transactions. High volume problem. Manual accounting process. Accounting system. Audits. Inexperience. Accounting. Financing. But it's discuss around blockchain. These other examples. Point concern issue, complexity, change. Okay. Point concern. Point concern issue. I will write here. Common regulations. Okay, new government regulations. So, for example, a few years back, 3-4 years back, government has imposed the restriction for importing the vehicles. Okay, so that is inherent risk. That is inherent risk. Because of that inherent risk, false statements. They got it. They later government imposed the government may impose the party. Right? So later beyond our control. That are mainly never means beyond our control. If you put the control, then you can mitigate. Automatically innate. Okay. So government imposed the party. But that's the risk. Okay, you regulars they can't import, but they have made some strategies. But it's currently they are made. They instead of new vehicles, they started to buy the same vehicles. So they continue their business. So that is 11 risk, but they introduce and control. Okay, introduce one control and they continue their business. The same restriction, hotel industry also got affected. Point the sign and police that public question or secondary question is point the sign. So hotel industry also got affected. Some are hotels, point the sign. Okay. So everyone local recommend okay, what are so inherent risk must be there. Okay. It's only inherent okay. Data we can mitigate, we can reduce by introducing controls. If you don't introduce control, then only problem will arise. Okay, inherent risks are there. I will explain this one by one. Inherent risks are there. If you don't have control, the ultimate problem will come. Inherent risks are there. It doesn't matter. If you have controls to mitigate those risks, then material risk will come. Let's take complex transaction. Okay. I will take simple example, complex transaction. Finished good inventory valuation. Okay. Finished good inventory valuation formula. Finished good inventory valuation formula. Marketing HR and some writing. Finished good valuation formula. Especially because it doesn't matter what we are done. Accounts one of the destination accounts. Yes, over at the market, my destination, one of my other not destination, one job. You're not writing anything. Destination on that. You're not writing it. Huh? Yeah, say, look, I got my valuation. Raw material. Systems near on what company? Yes, only. Okay. finished good valuations, raw material valuations, WAP valuations, how you are bringing your organization. I think automatically system will capture those things. Now again, memories are memory card. So you have two items, two items when it comes to organization. Some team building organization. Systems are there. So system automatically, ERP system. So system automatically, purchase and selling details can be captured by the system. Automatically, we will into the in and out and valuation. Okay. When it comes to raw material, trading company, buying selling company, the manufacturing company is about okay, if you work in manufacturing company, you can understand about the WAP valuation and issue valuation. But the concept, you have when we give a looking over and generally, what happens is manufacturing company and a clear like which are manufacturing near raw materials, near labor, it's raw material, many types of material. A, B, C, D are types of raw material. So the A item what's the raw material consumer? B item what's the consumer? Manually other than the bank. So then company will set the standard recipes. Okay. Manufacturing taking a standard okay. Standard cost take up okay. May charge a unit of A picture over below, B picture over below, C picture over set they can be actual the doctor and plan. But based on the average, they will say end of the month, they will do the standard comparison and they will adjust the variance based on price variance, quantity variance, and that's the logic. Okay, so standard A in the room, B in the room, always yes, and finished good per unit cost. The end of the day, end of the month, end of the year, or the variance reconciliation, actual and standard difference. Okay, so after that, they should balance. When a variance without Japan, they should amend the standard again. Already, let's say in general, they have fixed the standard costing. Every month they should check it. They should check, and if they feel okay, standard and actual variances are more, then they have to recalculate the standard cost. We charge one unit A only plus 1 second and 1.2 over person. Actually, 1.2 A material use person. Actually, 2 units use A material, A raw material. We charge 2 units use standard here. 100% different. Price is raw material, A raw material, price is 100%. So actual price is 100 rupees. Now actual price is 150%. So they are model. So 102, 103, 105. Okay, that's how initial and working progress. Stocks are calculated in the organization. Okay, so the discussion is complex transaction. Let's take initial valuation. Trading company is buying and selling company. Okay, if you take on the other hand, manufacturing company. Manufacturing company has 3 elements: raw materials, finished good WA. But when it comes to trading company, they have one item that is trading item. Right? If let's say a chart trading company, they will purchase the chart from one supplier and they will put margin and they will sell to their end customer. Okay, so that company they will have only chart trade. So trading company can finish good value for trading company is talking value for the place there. Manufacturing company is talking value for the place. Trading. But you have only one item. Easily you can identify the cost. If you see the purchase cost invoices, you can identify the cost. If you have the purchase cost, you will take value from the components. Cost of inventory is very slower. Okay, so to identify the cost, easily you can pick the relevant item for this invoice and you can find the purchase cost. When it comes to finished good, difficult, right? Raw material consumption, you have to check how much labor overhead, then you understand the cost, actual, comparison. So it's a complex process. Okay, so finished good calculation, finished good valuation is complex than trading account. Okay, which means raw materials, the trading account. Okay. Now, complex transaction. In manufacturing company, finished good valuation is complex transaction. A topic this is another problem. When it comes to finished good, yes, complex transactions are there. Okay. Again, now we have to check. Okay, now we have to check. Let's say two scenarios. One scenario, you know, finished good is complex transaction. Complex valuations are in clearly in doubt on that. That is clear. Now we have two scenarios. First scenario, you are auditor. First scenario, company complex transactions are there. Account assistant compute the finished good valuation. Let's take like that. Account assistant compute the finished good valuation and directly pass to you. Given system manager, for example, system manager. So what account assistant has computed the finished good valuation and directly pass to you. Means why? Now scale this is my order. He has computer. If you know this complex transaction, account assistant has computer. No one has checked, no one has reviewed, directly pass to you. Now you have to verify. You have to know the process. Now tell me, material statement is high order. Okay, that is first scenario. Second scenario, account assistant has computer, still manual, incoming computer. Account assistant has computer, but finance manager check and pass to you. Okay, still inherent is there. What is inherent? Complexity of finished good valuation. First scenario, directly computation actually pass to you. Second scenario, finance manager has check and pass to you. If any misstatements are there, finance manager level, he would have so see this is there, but compared to first scenario, this is this. Okay, that's why complex transactions are inherent risk. That one will change, but if you have controls, material statement risk is low. If you don't have controls, material statement risk is high. Here, so complex transaction, one of the inherent risk, right? High volume automatically inherent risk that you can go water, 10 items different. Okay, 10 items different, 100 items different, why are guarantee level 10 items different, 100 items different. 10 items extra, I will some manually. Okay, manually, not you can't use system. Manually, you have to get the mark. I will give you 10 numbers. 10 line items. I am giving you. Take a manually, turn the program. If I give you 100 items, where you make, where are high chances you make a mistake. 10 items or 100 items. Obviously, I have to publish 100 items. I manually make you. Okay, so high volume itself inherent risk. Then inherent risk 2 points we must keep in mind. Okay, inherent risk is nothing like that. Inherent, we can't eliminate the inherent risk. Inherent risk are there. They can nothing around that. But you can control the inner risks. And inner risks, you know, inner risks are there. If you don't have control on the problem will arise. Yeah. So if you have control, then you will stop the negative mistake. If you don't have the control, you will allow inner risks to create material mistake. Simple logic, make always an example of this. Yes, you have difficult subject. Why difficult? Certain reasons are there. Okay. If you don't make any strategies against those strategies, you will fail the exam. If you make strategies against these difficult factors, then you will get through this. Okay, that's all. Okay. Manual accounting system. Manual is a high risk system is high risk. Manual is manual. Manual errors can be and system or it will do this. So, inexperienced staff in finance division. In my example, I have taken as account assistant does not have enough experience, so he has calculated this valuation and he has directly transferred to you. So this is fine. Okay, so that is ignorance. Inexperienced staff in ignorance. But before giving initial valuation to you, the finance manager or finance control check and then this discuss. Okay. Point consideration. As a point consideration, we have start selling company, industry. So they have point consideration. It doesn't mean they are going to close the company. They have control, they can survive. If they don't have control, they will disturb. Okay. Government regulations. That also I have to point currency regulations and tourism corporate and import restrictions. Those are the reasons. Okay. So these are inner risk. So two things you must keep in your mind. Inner risk are there, but those inner risks can be mitigated by implementing controls. Yeah, that's why we say before introducing the controls or no related controls are there. You introduce the controls, then you can mitigate the inner risks. Yeah. Inherent risk is the risk that there is a misstatement that could be material misstatement, if there were no related internal controls which could identify and track that mistake. No related internal controls. Okay. Factors, example, uncertainty, going concern, revenue overstated, management bias, complexity, change, others. Okay, cash-based transactions. Then cash-based transactions also risky side. Okay. And cash-based transaction risk side. Bank statement making transaction the cash so illegal transactions can be done. Okay. In bribes, cash statement. So these are the inherent risks, and you can use these examples also. Here. Okay. Now we will discuss of controls. The main mark okay, control risk. Controls right material misstatements. Okay. Key point you must keep in your mind. Key factor you must keep in your mind. Here, no controls. Okay. Then no controls, control is क्या okay. No controls means ignorance. Controls are there, okay, but those controls are not operating effectively. That's why material restrictions are not prevented, directed, and corrected by the implementer. Okay, here controls are there, but those controls are not doing those jobs properly. Okay, means controls here on the material statement are reduce current, stop current. Okay, so those controls are not operating effectively, ineffective controls. Ineffective controls. Okay, so at the end about control this means no control failure. No controls means ignorance. Controls are there, but those controls are not operating effectively. That's the problem. Okay. Examples? Simple examples. Controls and take the examples can. Examples? Lack of controls. Lack of controls in audio, approach and behavior, section and behavior, reconciliation and behavior, lack of controls in. Okay. So the time being, I will base this on election is silently organization or okay, because of this problem, I will for the time because I want to explain one more area in control this. I want to take space for the time being, I will base space. Control this discussion. You don't need to base anything, but we can continue the same. Okay. So now control this. Okay, now control this. We are auditors. Okay, we are auditors. We know even this are there. Control this also there. Okay, what is meant by control this? If controls do not do their job, that is control this, which means preventing, detecting, correcting, and doing that. If controls do not do that, those jobs, then controls are failed. In short term, ineffective control. Controls are there, but ineffective. Clear? Okay. So, then, after you understand, so we are not going to see either separately, control is separately. This is combination. Okay. In my explanation, previous explanation, we have captured that point. Inner this, inner risk are there. And when that inner risk is there, the mitigator and control to this purpose. Okay, as a matter, we should see this control risk, inner risk as a combination, not individually. Okay, so if controls, the diagram I have given here, okay, if controls are effective, anyway, this control, this part we will discuss in detailed manner in internal control section. So internal control and this audit procedures in the same view you have test of this responsibility on it is responsibility in detailed manner. Okay, how in first level, I think I will be discussing in detailed manner test of control. I would have given small here I would have given in the as short notes, but detailed manner will be discussed. Normally I don't discuss in first level. Okay, then main level test of control for the help technical discuss. So this is one of the small area to cover here in this time. Okay, for the time being, I will tell you this one. Just keep it in your mind when we are discussing the test of control and risk response. We will link this one there. Okay, if controls are effective, controls are implemented by the organization, and controls are properly working, operating, which means controls will the objective. Then what are the customs like control objective is financial reporting, enhance operating metrics, enhance compliance. So even internal controls objective. So if internal controls achieve those objectives, the intended objective, each and every internal control has intended separate objective. Okay, internal control has implement karana, the internal control has a specific objective. Okay, and pre-approval. Payment was approval like a specific objective. Okay, so that objective is achieved by the human control, then successful internal. That is called effective internal. So if the internal control fails to achieve that objective, it's ineffective internal control. Okay, so if controls achieve its objective and controls are ineffective, then control risk is low. Okay, clear? Inner risk, they got control that. We are introducing the control. Those controls achieve its objectives and those controls reduce inner risk. The controls are down. Risk is objective. Okay, risk is control land. Why you should spend more money and you should implement internal control. If you want to implement internal control, that control should give them more return than the cost what you are incurring. Okay, not only monetary cost, time, monetary cost. So you will spend more time, you will spend some cost to implement that internal control. So that internal control should give more return than the cost what you are incurring. Then only you should implement internal control. I have discussed internal control limitations again, cost of benefit. So again we discussed cost of benefit. If benefits are more than cost only, you should implement internal control. Otherwise, no point in internal controls. Okay. So risks are there, internal risks are there. To mitigate those internal risks, company has introduced internal controls. So that internal control introduced then if that internal controls operate effectively, then control risk is low. What is meant by control risk? It's effective control. Effective means so control risk is low. If controls are ineffective, then control risk is high. Okay, that's the one I have given here. Controls, effective, ineffective, effective, low risk, ineffective, high risk. Okay. At the time of discussing the test of control, I will discuss in detail manner. So, I will discuss the okay. Okay. Now we discuss election risk. Okay, before that, anyway, we will discuss in detail the test of control. Listen carefully. Listen. Okay. Anyway, I will discuss in detail. Before discussing that part, I want to emphasize this point. Why we are going to discuss that's the purpose. Simple logic. Okay, why we are going to discuss to actually objective. What's our objective? Reading of the last cycle today morning. Our objective is identifying material statement. That's all. Because we need to give opinion on financial statement. Appropriate opinion we should give. Not inappropriate opinion. Other opinion has to be given. So if you want to achieve that objective, so our enemy is material mistakes. If the person is got a personal material mistake. So we have to identify the material statement in the financial statement. We have to identify material statements and we have to ask management to rectify that material mistake. Okay? And material statement that in the hand. Thus, we have to identify the material statement. Then we have to tell management, okay, these are the material mistakes, right? You should rectify. If they don't rectify, okay, problem difference. If rectify, then okay, file statement is corrected. Now we can give the free opinion. Okay. So our ultimate objective is finding material mistake. Means to provide opinion, we have to find material mistakes. Okay. So if you want to find the material mistakes in the finance statements, what are the risk factors in post material mistakes? Risk factors. So these risk factors will connect to one or two items, or more than that. Or several items. It depends. Okay. So risk factors are these are the risk factors. They are identified. Okay, these risk factors will post material statement through these accounts. Now those accounts also they are identified. They can be identified as this part. Some can be accounts high risk. Again, risk factors connected accounts. They are identified. Okay, high risk accounts. Next step. I have the risk factors. Okay. The risk factors are when accounts that they are identified. Next step. Discussion. Create this customer employee. This customer link on name okay. Yeah, next step. Now we have to see whether these high risk areas applicable to the financial statement create another. Okay, next step. May risk factors, may accounts. We have identified the high risk accounts. Now we have to see, okay, this is our plan. According to our law, okay, whether actually these risk factors will create the mechanism now on the landscape. They are all the take it up, verify them. And it's all right verification of that account. Okay, so we are writing the risk factors, we are writing the accounts. Now, against those risk factors, we have to design audit procedures. Here, so that audit process we have to design and we have to follow. Here, currently audit process design currently. That's why after this assessment, risk responses are there. After risk assessment, you have to decide the risk responses. Okay, so you have plan, you will plan the risk responses, and whatever you will plan under risk responses, you will perform on stage 3. Whatever you have planned, you can execute. Take up time and apply the plan. So you have planned risk responses into your second stage audit planning. Third stage, whatever you plan, you will execute. Okay. So why this risk assessment should be done? Design audit procedures. Clear? Okay. Take a clear? Any doubt on that part? Any gray area or estimation on it on? Why this assessment should be done? To design the audit procedures. To design audit procedures for formulating audit procedures for risk responses. Okay, I will come here that one. I think I will discuss in detail. Before that, I want to speak that much. That's why I'm certain now. The audit procedure design purpose is a discussion. Then why we are taking these controls? Why we are focusing on these control related things. Whether controls are effective or controls not effective. Why? Audit procedure design audit procedures design करने में clear and audit procedures design करने procedures we have to decide what gathering audit answers. We have to verify the amount. We have to verify the account. Audit procedures. Then audit procedures design करने we controls the audit. Audit procedures में करना. Then why we should focus on controls? Why should we bother about controls? What is the purpose? Your process karla, you can push make money, okay, no maintenance or maintenance are there. Okay, doubt in area में, इसके बढ़िया आपको इंस्ट्रक्ट एक और process करो. Then हमारा में audit process के अंदर हमारा discuss process. Why we should bother about it? Take our primary risk assessment, high risk accounts, you should do the audit procedures. Then my next phase is we have to do the audit procedures. Okay, fine. Then why we should focus on why should bother about the internal accounts? Because this is not the internal detail. The full answer on that. Point the introduction. The question simply I can ask me what is the link between audit procedures and controls? Focus is audit procedures. Then why we should focus on? Why should we bother about the controls? Short form, what is the relationship between controls and procedures? Sorry. Yes, control is fine. That's the controls we are focusing. Why we should take that? Okay, controls are implemented correctly or not. Why it should go? Why connection between audit procedures and attack control? That process and this audit process. The process audit procedure audit process audit procedure by controls implemented also as also errors. Why? What are the two reasons for making statements? One is errors, and one is fraud. So, okay, fine. Detected frauds, frauds and errors. Any answers? Answer slightly okay. Control checking also audit procedures. Control checking are not other than audit procedures. Okay, that's why I have given, not I, standard has given risk responses. We have two. What are those? Risk responses and audit procedures are saying. Okay, now risk response change audit process both are saying. Audit process risk response Because audit process confusion then the system make a plan and execution. Okay. Control checking also part of the audit process. That's why risk responses has two variables, risk of controls, substandard. So if test of controls, if you are not satisfied with the controls of the organization, you have to do more substandard. If you are satisfied, still you have to do substandard, but you can read it. That part only I want to take. I want to discuss in detail manner, and we can discuss in detail manner when we are discussing test of control. So you must keep in your mind that control like check on implement again or the frauds check on question one. Why control checking also audit not beyond audit. Okay, a control is the first substantive procedure which means okay by control. While we are changing control also part of the procedures, everything are clear. These are keep this one in your mind. Okay, purpose manual mistake. In manual mistake, so auditors are allowed to auditors are comfortable. Okay, control control checkers are then audit trust where management recommended now we are the fraud and errors management board of it started the name or fraud and errors in the project. Yes, company fraud and errors fraud and errors you check controls. Okay, so our ultimate purpose is ultimate objective is the manual descriptions are there. If you comfort with the controls, which is effective controls, you comfort with the controls, that means material misstatement within controls control per mind. Effective controls indicate control. A assumption A control should make them long. If controls are effective, then you can get the conclusion that okay, because of this controls, because of this effective controls, this company will not allow to make material misstatement. So that comfort I am taking. Okay, if I take that comfort, then I can rely on the controls. Reliability effective again. I can rely on the controls. So controls are effective. Those controls, effective controls, do not allow to make materials. Do not get under the control control. Okay. it will reduce the material misstatements. So, some extent I can rely on the controls. So, my objective I can achieve because of these strong controls. I can make the conclusion. Material misstatement chances are yes. Okay, here if material misstatement chances is less because of these effective controls, still I have to do the substantive. Substantive cannot gain test of biggest now and it will gain. Branching into my again the subtopics here. Without any test of biggest now and it will gain. It's about control rely controls again, temporary controls again. I can limit substantive procedures. I can't ignore the substantive procedures. Okay. The controls substantive procedures you can limit the substantive procedures. If you don't rely on the controls, then you have to increase the substantive procedures. Finally, auditor has two options to get the conclusion to satisfy this word. Controls or substantive. If controls rely, no issue, still you have to do, but you can limit the substantive procedures. If you are not relying on controls, then other option, you have to satisfy yourself with substantive procedures. There, that part we discuss in detail, but I want to reach that one here. Now we will go on to reduction phase. Reduction. What is meant by reduction? Simple explanation. Audit fails to deduct material mistake. That is called reduction. Reduction is auditor fails to deduct material mistake. That's it. So why auditor fails to deduct material mistake? There are two reasons. Why auditor fails to deduct material mistake? There are two reasons. One is sampling risk. Second one is non-sampling risk. Okay. What it means by sampling risk? Sampling risk is simple. Sampling risk means auditor explains the audit part based on sampling. Material accounts also he is not going to verify 100%. Okay, let's say revenue is a material account. Okay, revenue is one of the material accounts in the audit. In the revenue, sales transactions, particularly your audit plan has 1,000 transactions. Okay, 1,000 transactions is the particular year. That audit plan, your audit plan has 1,000 transactions in sales transactions. Are we going to check entire 1,000? No. Yes, revenue is material account. Just because of material account, we are not going to check entire 100%. We are not going to check entire 1,000 transactions. From there, you pick the sample 20 or 25 or 30 samples we will see. Okay, so let's say 100 transactions are there, over about 1,000. The 100 transactions are there, 100 sales transactions happening in this period. that 100 transaction, we are not going to take 100%. We will take sample. That sample can be 20 or 50 or 25. Determined, if we determine by auditor based on the problem and budget. Okay, so that is called sampling risk. If 100 transactions are there, out of that 100 transactions, let's say 100 sales transactions are there. Okay, 100 sales transactions. Out of that, auditor checks 25 transactions. Sampling. Okay, sample 25 transactions only. Yes, so balance 75%. We didn't check. That is called sampling risk. Okay, because 75%, 75 transaction making, management win the good. So, that's a risk. Why reasons? Why auditor needs to get the management statement? Yes, he's focusing only about samples. So, in this case, 25 transactions, 25% he has rated at sales. Balance 75% sampling risk is there. 75 transaction making, statement management statement make the good. That is called sampling risk. Okay, so how this sampling risk can be mitigated? How it can be mitigated? How you can be mitigated? Only one answer for here: increase sample size. Okay, in this case, if auditor increases sample size to 30, okay, to 30, then now our risk is 70% of the samples. Next, 30% stock. If the number is correct, 25 transactions there. So 75% is sample risk is there. Now we are increasing the sample size to 30. So now percentage sample percentage is 7. So sample risk can be mitigated. It cannot be eliminated. Okay? Any risk you cannot be eliminated. You cannot eliminate. Okay? Any risk you cannot eliminate. You can reduce the risk. So here also sampling risk, not checking parts are there, not checking transactions are there. So many statements can be done in those not checked areas. That is called sampling risk. That sampling risk, if you increase the sample size, then you can mitigate the sampling risk. You can't eliminate the sample risk. Yeah. That is called sampling risk. So, other than the sampling risk, auditor fails to deduct the material statement. Other reasons, whatever reasons you find why auditor has failed to deduct the material statement, all other reasons will come under non-sampling risk. Okay, other than any reasons are there, because of that, auditor has failed to deduct the material statement, all those risks will come under non-sampling risk. Number 1, poor planning. What is meant by poor planning? If you don't do the planning properly, audit planning properly, no audit plan. If you don't do the audit planning properly, then what will happen? You can't identify the high risk areas. High risk, low risk, moderate risk areas, you can't identify. So if you can't identify the high risk areas, what will happen? You will spend more time to low risk areas. Then there are chances to miss the maximum statement in high risk areas. Poor planning. Time pressure. Inexperience audit staff have been allocated. What else? Many branches. No supervision and regular review. Okay. These are the few reasons for why auditors fails to deduct monthly statement. Okay. And one more thing also you can write new client. Deduction risk is the failure of the auditor to deduct the material misstatement in the financial statements. I would have told you the few most important things are highlighted in us. Okay, you don't need to remember entire thing. Okay, highlighted areas you should understand. You should keep your mind. Based on that, you can develop the answer by using your own words without changing the content. Okay, so here deduction risk means I have highlighted blue color and red color. I have highlighted. That is enough for you. You know those things. Other things you can put your own words. Failure to deduct the material misstatement in the financial statements. What are the reasons? Relative inexperience, new client, lot of time and fee pressure, planning was poor. These are the reasons. Anyway, I have given the separate these things. I have given separate topic as well. Sampling risk. This risk arises when audit procedures are applied to samples rather than entire population. Whatever I explained, I have given. Non-sampling risk. Non-sampling risk. This risk arises from reasons other than sample size. Audit staff inefficiently experience first year audit, time pressure, many branches, other risks. Okay. So other than these are the few reasons, not all reasons. These are the few reasons other than the sample risk. If any other reasons are there, why auditor has failed to collect the material statement, all the reasons will come under non-sampling risk. Okay. How you can mitigate the risk? How you can mitigate the sampling risk? How you can mitigate the sampling risk? How you can mitigate the non-sampling risk? These are the things. So these are the reasons. So these are the reasons. If you correct these reasons, those are the strategies. Make it unknown. Make it in a pull. Make it unknown. Make it in a pull. What are the non-sampling risks? Reasons. If you know the strategies, you can convert them into reasons. If you know the reasons, if you eliminate those reasons, then you can reduce the non-sampling risks. So number one. Poor audit plan. You have to do the audit plan properly. Regular supervision. Review. Not there means manager and partner should regular supervision. Regular manager and partner should do the supervision and regular review during the audit period. Audit period. Time test is there. You have to take additional time from management. We have to discuss. And new client means you have to understand the new client properly. You have to enhance the professional skepticism. Questionable mind, you have to enhance. We have to tell audit staff importance of professional skepticism. So these are the strategies. How you can mitigate the non-sampling risk. If you implement these strategies, you can mitigate the non-sampling risk and you can get the material. Adequate planning, assign more experienced personnel to the engagement team. The application of professional safety is on increased supervision and review during the audit. Okay, these are the strategies to mitigate the non-sampling risk. We'll have a 10 minutes break, and after that we will move on to one small area is there. Before that, I will discuss this responsive ID companies. Okay. Sorry, explain this. As one is there, that will be filled in response. So we discuss how if you find any business risk in the organization in audit plan, how those business risks we create the audit risk is important. The role risk can be classified into two category. One is business risk, another one is audit risk. And all business risks are not important to us. We should focus on audit risk. Business risks are not important to us, but for examination purpose, what type of business risk, what is meant by strategic risk, what is meant by operational risk, statistics are not important to us. But most importantly, when you are going for an audit client, the audit team, like a particular company's business risk, you should understand. The important is why you are the internal risk, you understand that money, the internal risk, and more business risk. In other terms, don't get misunderstanding. Business is not equal to internal risk, but business risk can be considered as internal risk. And whatever business risk you find, business risk inherent risk for that inherent risk, generally businesses can see images. Smart doesn't mean when business is equal to inherent risk. For understanding the purpose, if we find it's business risk in the organization. So, important point, how this business risk will generate audit. Audit risk providing given appropriate audit. So, how this business risk will create material displacement. That's the point. Okay, how this business risk will create material. If material displacement are there in the financial statement, that is ours. That's point. Okay, so let's take 3 examples. Number 1, volume concern. Volume concern we discussed when we were discussing inherent risk. We discussed volume concern and inherent risk. So volume concern is all the business. Okay. Let's say. Now, previous example, same example we can take. Car sale company. Government has import restriction. So that is that will impact on the car sale company's operation, business, going concern. So if you find that risk, if you know that risk, how that will be linked to audit risk? You have found, yes, in my audit time, going concern issue is there. Going concern problem is there. That is correct. Now, there are going concern in our business. But you must think how this going concern issue will create material. How this going concern issue may create audit. That can then going concern is not going concern material. Finds to be prepared. Okay, and then the company or client going concern material. Going concern material finds to be prepared. All the prepared finds it without mentioning non-current presentation. All the assets must be put under all the liabilities must be put under liability. Okay, so without classifying current non-current category assets and liabilities must be. Okay, let's say going concern issue is there. Okay, car sale companies cannot import the car sales. Cannot import new cars. But that's a going concern issue. That's a reason. But it doesn't mean they will close the company and go. If they have strategies, those strategies should be disclosed. Okay, we may strategies of the so that strategies must be given by them. Those strategies must be satisfied by the auditor. Okay, so if audit is still not the one person if inadequate disclosures. If inadequate disclosures are there, that is audit. So, one person here, one person here, one person issue, right? One person issue here. If inadequate disclosures are there, then problem. That will impact the financial statement. Adequate disclosures are there. So, if one person issue is there, you should be. See the adequate disclosures are adequate points are disclosed in the financial statement. Okay, what are the others? Let's say this is long outstanding balance. Long outstanding balance is trade data. Long outstanding balance. Recovery problem. trade data against long outstanding balance are thing. Okay, that company has not collected the money on time within the credit period. So that's the problem for company recoverability. So that recoverability long outstanding balance, how it will impact to the audit risk, how it will create audit risk. Oversight on the asset. Okay, recoverability of next time 100 million, let's say 50 million trade data balance recovery in the financial year. Out of that 50 million. Out of that 15 million trade receivable balance, let's say 30 million long outstanding balance. Because it is doubtful, more than 2 years, more than 3 years balance are there. If you will take a doubtful number, you should make the provision. Okay, accept the minimum. That means you should get the benefit. On a non-monetary benefit, you should get. That is called asset. So if you can't get the benefit from the particular asset, then you can't recognize as asset. It is the asset is wholesale. So the wholesale can bank, they have given for quality bank to pay 1 lakh change of 1 lakh or the government. One of the reasons is 1 lakh is the loan amount. That's all loan amount. And you are 1 lakh or a government bank because actually out of the or the benefit I got on the potato of no, because what are the more reasons for a government. But again, it's something like that. Okay, back to the one lakh, one lakh, 8 lakh, we 1 lakh, one accept our or benefit. So it should be recovered. So if you can recover only, you can show it as asset. Otherwise, in long outstanding balance, provision must be passed. So long outstanding balance are there. According to my example, 50 million value of trade debtors will be the book, but 50 million entire 50 million correct. Out of that 20 million will be recovered. 30 million problem. So that problem part you have to reach. How you can do it? By making problem. So audit risk. How that connects audit risk. Most likewise, I can tell non-moving inventories. Okay, non-moving inventories also on the by if obsolete stocks are there, non-moving inventories are there. You can't overstate as a thing. But when there is a obsolete stock or damaged stocks, non-moving or damaged stock or damaged. Okay. So non-moving or damaged inventories are there in the books, the financial statements. Let's say 20 million. This goes for a deal. If 20 million or full of so non-moving damage means you have to make a provision. So here also statement of inventories. Okay, statement of inventories. What else? No. Companies product proper quality. Poor quality of How it will this is business risk mean negative business risk. Quality product given and give manufacturer to push it up quality net planning business risk. How this product poor quality will impact audit risk. Now we are discussing how business risk will create audit risk. So business risk is a business risk. Long inventory, long outstanding receivables, poor quality of product. Those are business risks. Those are not audit. Those are not related to auditors. Those are purely business risks. But the important point is how this business will be created. Audit risk is the important point. That's why I'm trying to share business risk and making audit risk. So the few talks I have given several examples you can read. The concept you have to understand. That's why I'm making this. Poor quality, product quality of the product, poor quality. Then how that poor quality will impact on the audit risk. Not the warranty claims will come. Poor quality comes from anything. Warranty claims will come. So more warranty claims. More warranty claims. So as an auditor, if product quality is low, if any complaints you have received, company has received, and if you notice that part, then you must ask organization to make adequate provision. Okay. So these are the few business risks. How business risks will create audit risks. So these are few business risks, and this side I have given how this business will create audit risks. Okay. So yeah, I have given this is principal risk, business risk. Okay, this I have taken from the CA. Principal risk and immediate financial statement implication means audit risk. Economic pressures causing reduced unit sales and eroding margins, inventory values. How it will affect inventory valuation effect now. Economic pressures resulting in demands for extending credit, receivables effect now. Product quality, inventory values again. Then warranty claims inventory value yeah, I have given the idea. Okay. Yeah, I have not given the entire thing. So the important point is because I told you, you will get the questions to mitigate. Okay, you may get the questions like case study, scenario will be given. In that scenario, business risk you have to identify instead of notes. Okay, and how those business risks will create audit risk you have to write. So, what are the business risks and how these things connect? How these things will create an material statement with audit risk? Those things okay. I can give examples. I have given here and here also I have given. But the most important one, concept you must understand. Okay, that's why I have given like this. Long outstanding balances, non-moving stocks, product claims, going concern issues, okay, economic pressures. Okay, government has imposed a restriction for tax requirements. So that is business risk. How that business risk will connect to audit risk? Then going concern problem will come. That going concern problem is there means adequate resources must be disclosed. They should have a proper plan to overcome that going concern, that problem. If they don't have adequate strategies, then what we should do? Financial statement should be prepared based on not going concern, without going concern. If they don't prepare the without going concern basis, then that is non-compliance of accounts, accounting standard. Then accounting principle, going concern principle the basic. So it's okay, qualified opinion. That's how you should connect. So here you will do this, questions. Then you can understand. So we will do certain questions like business risk and how we can connect to the audit. But here, get the point with these examples. If you notice any business risk, that business risk will create the audit risk. How it will create that logic you have to understand. If you have any doubt, you can ask, but we will do one or two questions in relation to business risk and it will connect to audit risk. So here also I have given examples. customer dissatisfaction related to inability to meet the order requirements. Business risk. The customer dissatisfaction at customer that will impact to going concern. Customer dissatisfaction related to the invoicing errors and transportation damage. Later, receivable valuation question. So likewise, this slide I have given business risk and how those businesses will create the material mistakes in financial statements. I have given this. So we will do the questions, identification of business risk, and how those will lead to the audit risk. One of the questions we will do. Okay. Note it down, and after that, we will move on to assessing this. Make a note for a Now we have identified the risk. What are the risks we have identified? Inherent, control, direction risk. We have identified the risk. Now time to, once we identify the risk, now we have to assess the risk. So next topic, assessing risk. Once we identify the risk, what is meant by risk assessment? What is meant by risk assessment? Identifying and assessing, analyzing risk factors which could lead to material mistake. So we have now identified. We have identified the risk. Now trying to analyze, assessing the risk, analyzing or assessing the risk. Assessing risk. After assessing the risk, how we can assess the risk? So that risk assessment procedures. Okay, discuss with the management and environment. Observational inspection. These are the risk assessment procedures. Entire risk assessment procedures will cover identification and assessing the risk. Once you assess the risk, okay, then assessing the risk assessing this again output okay. Once you assess the risk, you will get two outputs. One is overall financial statement evidence. Another one, assessing evidence. Now we have identified the inherent risk, control risk, technical risk. Once we identify those risks, now what are the risks will affect entire financial statements? What are the risks will affect specific accounts? That analysis we have to do. That after analyzing that part, we will get these two outputs. Next, misunderstand current and types of audit physical evidence plus a part game. Okay, types of audit is three. Okay, inherent risk, control risk, related risk. These are not types of risks. After assessing those inherent control reduction, specifically from reduction, inherent control, they take a management side risk, reduction risk, and office risk. They update failure. So basically, inherent control risk. Okay? Inherent control risk are the management side risk. When you are writing types of point risk, inherent control risk is after analyzing, after assessing those inherent control risks, you will get two outputs. Okay? Those certain inherent control risks will affect entire financial statements. Not only one or two accounts, entire financial statement. Certain inherent control risks are there. It will affect only to certain accounts or assumption in that particular account. Okay. Based on that, we will classify these two types. So remember, these are not types of risk. Types of risk, three. Those management side risk impact analysis after asking those things, we will make these two results. Assessment risk, okay. Overall finance statement level risk, action level risk. What is mean by overall finance statement level risk? Certain risk. Material statement. All statements, okay. The entire financial statement. This risk will create material statements in entire financial statements. Not only specific, not only for inventory, not only for revenue, entire financial statements. Okay, those type of risks we will consider as overall financial statements. What are the examples? What are the examples? And inherent risk taking up discuss certain examples. Inherent risk taking. What are the inherent risk examples we have taken? Inexperienced staff. So here, we can make it on inherent risk example for that. Come next example. Okay. Inexperienced staff. So from there, we will pick three examples. Okay. From there, we will pick the example. We will connect two big players. Let's say inexperienced staff. One of the inherent. So inexperienced staff, it's an overall financial statement. Now, what is the meaning of overall financial statement? The logic is important. Concept is important. So the risk create financial statement in entire financial statement, not only in one account or one assumption in that. The several accounts will get it. So if inexperienced staff are there in the financial statement, whether they will make the misstatement only in the revenue or only in the PP. No, they may make mistakes in several accounts. Inexperienced in revenue experience. Some people have experience then shall I come in experience. So they make mistakes. They may make mistakes in several areas. When they are computing depreciation, they may make mistakes. When they are recognizing the revenue, they are also they may make mistakes. When they computing inventory valuation, that's the mistake. When they are computing provisions, bonus provisions, provisions, so those types of provisions, they compute at that point, they may make mistakes. When they perform bank reconciliation, they may make mistakes. Okay, so inexperienced staff, they may make mistakes in lot of areas in the financial statement. So not only one or two areas. So the risk rate recognition in the entire financial statement. So that is overall financial statement levels. May instead of being on a HR accounting without they will not statement that several accounts will get that. So that is called overall financial statement levels. What else? Point one. Point consumption is revenue without point consumption. People without point consumption. Entire company को point consumption को. So point consumption. Not only here on this, you can think about working is also. That's why I go the management side is. Here is control. All this we can specify into overall estimate. Control depends in several processes. Lot of process, not only one process. Revenue process, control limits are there. Payment processing, control limits in on. Receipt processing in on. BP processing, control limits in on. So as an auditor, you have identified lot of control limits to see. Control limits in several processes. So that will impact entire financial. So all other processes are having good controls. Only the revenue process has weak controls means that will impact only to the revenue. But several control weaknesses if you find in several processes, then that is entire financial statement issue. If you find control weakness only in one of the processes, that is actual developments. The others, manual system maintenance. Okay, manual accounting. Manual accounting system. So manual accounting system, whether a company maintains only for revenue or only for period purchase. No. Entire financial statement, entire financial reporting process, and you do manual process. So overall financial statement is. PP calculation several areas will get affected. So that is overall financial statement levels. Okay. Assessing the risk of material misstatement, two categories: assessment level, overall financial statement level is. Overall financial statement level is or financial statements as a whole. Refer to risks that relate pervasively to the financial statement as whole and potentially affect many assets or many accounts. Okay. By concern, management overhead control, pressure to meet arm. That also you can write. What do you mean by target question? Oh, pressure to meet target. What is mean by target pressure? It's a CEO of the company. Say example, and practical example also. Finance manager or finance controller, CEO. If the finance manager of the company delegate bonus, for example, based on the process. Okay. Based on the profit, 1% of profit, he will get the incentive. Apart from the salary, he will get the incentive of bonus, performance bonus, 1% on total profit earned during the year. Okay. So, the market median is also profit area by 80 million that 1% change. Market median wants to be around 80 million. So 1 million, you get the bonus performance bonus. So 80 million, if we assume 80 million, take another loss. So if we assume higher profit, you will get more incentive. So always he tries to achieve high profit. So high profit yang akan presentasi yang kita performance kita di dalam akan ini saya kita ada performance based performance based incentive over financial statement review ada pakai external tool. Technically non-technical reaction. Technically, if you reduce revenue expenses, okay, revenue expenses. Yeah, for example, with PP later, what are the revenue expenses? Let's say one of the revenue expenses in relation to PP. Maintenance maintenance capitalize automatically. So that's not target question. I will later target. Incentives even based on the performance. That's also is so what capitalize automatically so if you notice any incentives or any commissions or bonuses paid based on the performance, then as an auditor you should have more concern about that circumstance. If that's the case, then capital nature, mistake. Okay, so we should have more concern about that. Provisions again. So let's say this year, if you are going to set this, if you are going to pay the bonus for staff for 25 versus let's say your cash payment may do in August or September. It depends on the organization. Okay, but that bonus is rated to 25 versus speed there. And if you know, yes, I'm going to pay bonus to staff in relation to 25 versus speed, means you have to pay the production. That is what we have. Maximum is a pay time. Is staff la, revenue to earn effort as all of so to show the higher profit, higher performance, what management may do, they may eliminate those type of provisions. But those are obvious payables, obvious provisions. You must pay next year. If you have an idea, you must pay. Then that provision must be recognized in 11 Then obviously bogus entries, revenue transaction, revenue March month bogus entries. You have to check subsequent period trade moves. If the bogus other also so the March month you increase the revenue by putting bogus in place, bogus without revenue bogus numbers will be raised and they will give us subsequent period. So as an auditor, if you notice, okay, performance-based bonuses or performance-based incentives are given to a staff or higher employment people, then you have to check this type of things. It's subsequently whether reversals are taking place. You have to check. Reversals are taking place in the subsequent year. Okay. You have to do more checking part of that area. Okay. I did not cut off. Some of bogus translation and then bogus internet like data cut off. Something only they have sold to the customer. Like they are giving sale to the customer. By 8 sales return, right? So I'm telling you, what they were technically it argued that focus the game in focus obviously focus. Later the argument got a million gold and we could expand that's also technical. So if performance wise bonuses are given or performance wise incentives are given, you should be that is performance wise. Target question means same thing, same logic you can apply. Let's say marketing team, sales team. They have been given 100 million target or 200 million target or number of quantities by target is not. 8 target is achieved. So then it may affect to several areas. Financial statement. Okay. That now example like performance bonus incentive like overall the action level. The monthly performance bonuses incentives overall the action level. It says here maybe paid based on the performance, based on the profit. Okay. So based on the profit, 1% you will take the incentive or commission or bonus. He achieves 100 million, he will get 1 million. If he achieves 80 million, he will get 800 questions. Okay, that's the thing. So that is it confirmed. That list is overall of action level. Where we can classify that is. Like a skill money, and reverse it. This overall action levels. This is whether is CFO will be based on the performance. Okay, based on the performance, CFO will be commission or bonus. They say bonus will be paid by company to the CFO based on the profit. Okay, that is this. That is, we can classify the overall risk or external risk. Overall, by overall, if he achieves more profit, if he brings over more profit, he will get more bonus. Okay, then to achieve more profit, he will touch a lot of areas, not only one area. Focus revenues, he can create. Across revenue issues, he can create. Capital revenue nature classification, he can manipulate. Okay, bonus provisions, other bonus provisions, other obvious provisions, he can cut to increase the profit. So he can touch in a lot of areas in the finance, not only in one area. Depreciation he can reduce. You know, 5 years coming, 4 years coming, 5 years ago. Depreciation. Deferred tax is not deferred tax and economic profit and deferred tax okay, you know the deferred tax fine report. Deferred tax profit before tax profit after tax deferred tax. So they can touch in several areas. So if risk is related to several areas, that is overall financial statement level. Okay. बहुत प्रश्न करते असाइनमेंट ಗೆ ಹಾ ಅರೆ when we can put the presentation what after other first second ne 16 16 huh next week I will take one action already given to class on the one action presentation of 16 Okay, note करना है start of मूल प्रश्न है possibility action ये होगा 16 to 9 two option 16 to 9 then कितना option है कितना option है मोड़ो any issues in the group we can discuss certain things I want to tell I have already told such also I have told then ये वो ग्रुप में डाल करना क्या आता है मतलब सिर्फ आते निकालने के लिए भी ग्रुप अरे के बाद पसंद कर एक प्रश्न है वो वाला किसी को पसंद करने के लिए माफ कर दो ठीक है मेरे पसंद से ही देते हो ऐसा प्रश्न में ये ना ग्रुप में आते रहने चाहिए ना आज करना होता है एक पोस्ट में करना होता है 500 वाला की पोस्ट एक बार पसंद कर वाली पोस्ट नहीं करना इसकी प्रश्न है I wrote presentation, group report, the same marks will be given. Here it's 20 marks will be given, group report, that report, that marks, each and every person will get the same marks. The balance 20, presentation, that will depend based on your presentations. So, team any group any, other than half day, you can work case आप लोग क्या पसंद करना है या तो पसंद करते हैं करो ना या तो हमें लेकिन सर डेमो सब मार्क्स बिल्कुल कर बैलेंस से करो एक ही कमाई एक सर्विस मार्क्स की लेकर हम देख लेंगे ना ये पॉसिबल ये presentation slides we going to upload एक अपलोड करना है एक presentation also number of slides more really एक या सामान नहीं maximum you can presentation can go 20. Okay. Don't make it 30 minutes. If you make it 30 minutes, that also will lead to that's not process. Thank you for the either we can give that's why 6 hours only. So maximum you can do more issue. Any doubt? Any clarification is related to presentation? Q&A things like this, I can Q&A next, I can answer more questions. It depends. Okay, the Q&A thing, presentation, listen. That's it. Okay. Q&A marks that nothing. The presentation, if I have any questions, I will ask. Okay, but 20 marks से क्या होगा यार? 20 marks की ना presentation. एक element आपने Q&A. Q&A होगा ना. तेरा दूसरा element क्या है? प्रश्न आपने marks से क्या करना है? अरे presentation logical या presentation concept नहीं होता उसमें. ठीक? just knowledge technical side and marketing. Okay, any doubts? Okay, that's set up 9 turn, set up 16 game. On that question, okay, any further clarification? Limit your presentation to 15 to 20 minutes. Anything else? Same audit form same audit forms. Next day, already audit form same audit form select इतने शिवास के ट्रांसफर इस तरह के होगा मेरे को मैंने मेरा ऊपर सब टाइम करना है लेकिन ऊपर स्टे ऑडिट इतना इतना कंपैरिजन ये वाला ऊपर थी ना ऐसा ऑप्शन ऑडिट एक ऑडिट में बता रहा है हां और अपना डिस्प्ले प्लान को ये खाली डिस्प्ले प्लान ना सेकंड audit करना है डिवाइस का मतलब डिवाइस मतलब ग्रुप टीम का ग्रुप नंबर है का और ऑडिट को सेलेक्ट करके अपना हां ऐसा ग्रुप बटन में एक बार पूछो बराबर और आगे क्या आउटपुट करना क्या साधारण को कुछ लगा तो देखिए नहीं होगी यहाँ तो हमारी So basically, before invest everything. Huh?
Okay. As certain level risk means certain risk will create material misstatements in an account or assessed in a question we discussed, but we have discussed already in personality actions means these things will affect entire bank statements, not only for one account. But this risk will affect only one account, even in an image. Revenue. Expense and expense. If bank and bank, if one account effect payment. Or assessment, one of the assessment in the account. It has even valuation of personal. So this will affect only to the one account or in the assessment in one account. Okay, it will be valuation intrapersonal. That's the entire in the emotional perspective. Okay, so examples: inventory valuation, revenue recognition. Likewise, lot of examples you can give. Evaluation. Okay. Valuation no accuracy. So these are the examples of the reference. We create material misstatement one name or one action name. What are the ignorance we can say? What are the ignorance? What are the ignorance you can give examples? We connect to overall listening, overall financial listening. So, what are the ignorance to control this? We can give examples here. Yeah, algorithm translation. If you find algorithm translation DP, then that is will connect only to the piece. That is will not be to inventory or revenue. Okay, so high volume of PP transactions. Okay, complex finished good valuation. Okay, high volume of revenue transactions, sales transactions or revenue transactions. So likewise, control weaknesses in one process. Okay, control weaknesses in one process. Let's say PP process, bank reconciliation process, payment process. If control weaknesses are available in one process, that will link to action level risk. Okay, that will link to action level risk. Control weaknesses in several processes or I pick up process lot of processes get affected. Here, control weakness in one process. If it is PP, it will affect only to the PP. If it is revenue, it will affect only to the revenue. Okay. Assessment level is valuation of inventories, completeness of revenue. Okay, what is mean by assessment? We will discuss later. That's why I wrote this one also I have emphasized here. Account or assessment in one account. Entire account inventory valuation problem revenue completeness problem entire revenue is not question of finance. It goes to the factors called as action level. Question करा दे अरे next class को मैं एक क्वेश्चन का पता लगा है लास्ट क्लास लाइक वो सुन ये हाउ क्लियर मीटर को क्लियर हमारा अक्सर क्वेश्चन एक क्लियर नहीं क्वेश्चन है बस आपको क्वेश्चन स्टेट next class I will do the question is one question we have discussed next discuss I can give the answers no they regarding the source and regulation Laws and regulation one is deposit 5 million, 50 million, basically 5,000 months. This question we have discussed. How to write the answer we have discussed. I told I will give the answer, but better at the morning I want to make it. Ogla me answer के लिए ला मरा WhatsApp पर इधर गाड़ी में ये मामा डिस्कस कर रहे हैं मामा यार तो क्वेश्चन से वेट नहीं करे ओगला का प्रैक्टिस करना आंसर के लिए ला मरा okay, so next class I will give the answer. So how to write the answer I will task given है how to write the answer I have given me make any question yes how to write the answer I have given audit. So based on that, you have to write the answer. Okay, and simply I will check, and hereafter all the questions like that. You can pass it. And question D and overall practice is only giving more practice than anything. Other questions, answers to the personal. Important point is overall okay, so then next class I can give the answers. So, and audit material question also I have to. So that also right until I give the answer, don't wait. Audit material question also always not today. Already I have uploaded. Because I karla. Yeah. Answer क्या देखो मेरे because so risk assessment is over. Next topic is reform. Take risk responses. In audit planning, there are three main concepts. What are those three main concepts? Because our was understand that. And asking about last okay, what are the three main concepts in audit planning? What are the three main concepts? Concept concept one certification for the unless working science one. What are the three main concepts? No, I'm not asking. Audit planning, what are the three main topics we have discussed? Two topics we have covered. Last one, this part. Understanding the engineering environment, risk assessment, discussion. Understanding unit, risk assessment also unit. Under risk assessment, under risk assessment, under risk assessment, what are the topics we discussed today? Before that, last week, last term we have discussed what is mean by risk assessment. What are the risk assessment procedures we have to? If they are, I want to take analytical review. Risk assessment procedures and identification of risk. Identification of risk, three types of risk, audit risk. Then identification of risk, inherent control. What is mean by inherent, what is mean by control direction, examples. And businesses, how businesses will create audit risk, they have issues. And last part of the business, last part of the discussion, we discussed overall financial statements. Here, so identifying the this, we have to segregate into overall and financial statements. One point I want to emphasize, I didn't mention, the group also I didn't mention, just you can note it down. One point. Now we have identified the risk. Okay, we have assessed the risk and we have segregated into overall external. Okay. The morning and code, when we are identifying and assessing, we don't know what are the risks we get when we mistake. Entire risk we identify the okay. After assessing, after classifying overall and assessment level risk, pointed out first day. Now we have list of risk. Overall risk, we can go. That assessment level risk is something like okay, 30 or risks are there. So now out of this 10 and 20 risks, auditor will not consider all the risks. The auditor will consider out of this 10 overall 20 external risk. What are the risks we create? Material risk. Then is the one which material risk will create risk. Those risks are significant risks. Okay, auditor will focus only on significant risk, not risk. Significant risk means risk factors which will pose material risk. Identify the managing comment experience once we assess after completion of assessing stage, now overall assessment level this time on. Now we have to pick what are the significant risks. Those risks only we will take going forward. Risk responsibility. Okay, so based on the risk assessment, what are the final two outputs we got? Overall level. So likewise, based on those risk assessment outputs, risk responses also, we have two. One is overall response levels. Assessment reverse assessment. Okay. Overall responsibility are easy because overall responsible not 20%. Okay. Overall responsibility, yes, we know certain things are overall risk. Startup pressure, control reduce like the professors and experienced staffs are there. So we know lot of issues might be there in the financial statements. They not just so then we have to then everybody we pay entire management we get a so what overall responsibility each and every account wise method entire audited studies come. Entire audited certain studies are those studies are overall responses. Okay. This overall responses will not link to one specific area, not only linked to inventory, not only linked to preventive, PP, expenses. These overall responses will link to entire audit, entire financial system. So that is called overall responses. Example. Allocate experience for example. Okay, experience what is staff high risk what is mean by high risk? What material statement in the blue here expect from audit. Okay, so that audit you have to spend high risk
You have to send a good experienced staff or low level also. Once you identify this audit is high risk audit. This audit in this financial statement may give a lot of financial statement. You are identified like that. So now you are the audit partner or manager. Now you will send strong team to that audit or weak team to that audit. Right? This just say strong team members in the weak team members in the strong team. Okay, experienced staff only you have to send. So if you notice, yes, near risks are there, high risks are there, inexperienced recording staff are working in that organization. So a lot of staff persons are there, perform incentives and functions more than are paid based on the performance. So they may manipulate the accounts, they will get doubts, you have to send strong team to the audit, then only they can identify the material issues. If you say, once you identify this audit is high risk audit, and if you say newly joined audit staff, then they are not in a position to identify issues because they don't have experience. Okay, that's my meaning. Proper planning. Okay, so these are the once you identify this particular sizes, this audit is a financial statements may give a lot of material statements. Once you identify, then you have to make strategies to cover entire statements. Audit team you have to assign, plan you have to do, and audit plan you have to do. Emphasize the importance of professional skepticism. So you have to explain audit staff why professional skepticism is important, why questioning mind is important. I overall question on doubtful mind taking importance not explained on and regular supervision review. As a manager, throughout the audit, they should do the supervision and review. I make company material statements very in our jail team during the period, they have to do the regular review. Then only they can identify the material mistakes. Okay, these are the overall responses. One thing you should keep in your mind, responding the risk assessment or risk responses. In this stage, listen carefully. In this stage,
still we are in step number 2. Second stage again. In this stage, risk responses means you are not going to perform audit procedures. Okay, you are not going to perform audit procedures. In this stage, you are designing audit procedures or you are formulating audit procedures. Then තමයි risk assessment එක base කරලා ඔයගොල්ලෝ design කරන audit procedures. Okay, got it? Overall responses, examples I have given, emphasizing to the audit staff the need to maintain professionalism, assigning additional or more experienced staff to the audit team, providing more supervision on the audit, incorporating more unpredictability. What is meant by unpredictability? I have explained. Unpredictability means then auditors like you sample basis in the not take current. Sample එක කොහොමද select කරන්නේ? ඒක ඔක්කොම දැන් how to pass audit එක කරලා තියෙනවා නම් ඒකෙම account එක විතර තියෙනවා නම් ඒ account එක දන්නවා මම ආවෝ කොහොමද check කරන්නේ. ඒකද මම high value තමයි check කරන්නේ. So high value නම් මෙයාලා performance material උඩින් තමයි check කරන්නේ. So that accountant knows what are the areas we are going to check. If that accountant auditor has long relationship, which means yeah, all the part accountant is करना auditor same auditor ना पर दांडे में कोई check करने के लिए. So yeah, predict करने जैसी विधि है तो check करना. So let's say generally, let's say in sales transaction, if you take sales transaction, systematic sample we will discuss something like that. Systematic sample means 100 transactions for example, 100 transactions okay, during the period. So now we are going to check only 25 samples. Okay, sample will check an entire 100 we can't check it. So this 25, how we are going to select 25? That's the question. Now, to put out the line without bias, so one of the methods, sampling methods, systematic sampling. If there are 100 transactions in DNA, then we are decide करना हमें किसी बात में select करेंगे. So 100 divided by 25, then sample interval is 4. Okay, then transaction 1 we are select करेंगे. ඊළඟ transaction එක transaction 5. ඊළඟ එක 9. So likewise you have to select 20. So bias का नया what is the make it plus when it plus when you know the now it plus when you know you have to done. So this is for systematic sample. Then make what I mean correct video out of path one you come and take comment done I will have the second here. Then make up it change then may up correct last 5 years we have pattern of the first transaction may have pattern third transaction. Then again first transaction we have select करना पड़ेगा. Then 4 interval लेकर sample interval लेकर 4. Every 4 transaction you have to select a sample. First one you can randomly select. Up to 4 you can select first transaction or second transaction or third transaction or fourth transaction. First once you select third transaction as a first transaction, first sample, they are not again right. Third transaction, example is first transaction. First sample we get a first transaction. So second sample we get a fifth transaction. Third sample 9th. This first transaction, there is no any RN possible to take only first number, first transaction. First sample, first transaction, RN possible. Sample interval like a phone. Up to fourth transaction, you can pick any transaction as the first one. Let's say instead of first transaction, you are saying third transaction. Then first sample is third transaction. Second sample is 7. Third is 11. Fourth is 15. That's how you have to do. So first transaction you can randomly select up to 8 sample interval. So out of count we can check the end. First select now make तो प्रयास करना मैं इसी बात को करना ना मैं ट्रांसफर करने तो एक एरर है आने वाले हमारी बड़ा प्रॉब्लम. Then what we should do this year we have to select from third or fourth. So high value streams means like I don't know now we will be required. So they have the check on money. They have predict low value items select on. Unconventional select on low value items sample data product select on. We check so that is called unpredictable. Okay. Incorporating more unpredictability into the audit procedures, making general changes to the nature, timing, extent of audit procedures. In the audit process also, you can change. You can change audit procedures. You should not use the same method of audit procedures what you have used last few years. So based on that, you can do the audit procedures, audit work that is called overall process. Okay. So next class, we will continue. Assistant level responses is most important. This part is important. But we have discussed with customers the same thing. But you get practical approach. What are the types of test of control? So in this test of control discussion, I have uploaded separate tubes for internal control. Okay, separate tube where I upload chapter 7 internal control. That internal control, what we have discussed in first one, 35% been on same yes, but not all the topics. We are going to discuss main part. How internal control I wrote today session by the this test of control I wrote control with I wrote why test of control is important for it. That is also part of the process. If controls if we are satisfied with the controls, we can limit the substantive procedures. So in that time we are going to discuss that two topics of internal control system. This is internal control. Second stage we discuss about eight notes from the important I will go through quickly, and most important activity is how internal controls will help auditors to do the audit process. A particular test of control okay, clear? So after that, substantive procedures, practical substantive procedures. Here I will discuss. Here I will discuss practical substantive procedures. We can discuss that. Okay.